Finance Minister has issued a warning ahead of Scotland's independence referendum. Over to you, Marcus.
Yeah, George Osborne says an independent Scotland would not be able to keep the British pound as its currency. That's seen as the sternest warning yet from the British government that independence would cost Scotland dearly. Scots will vote in September whether or not to become independent. Economic issues in general and the pound in particular are taking centre stage. Julia Seeger has more.
The warning has never been so clear. In a tough speech on Tuesday, UK Chancellor told Scottish voters they would lose the pound if they voted for the country's independence in a referendum later this year.
The pound isn't an asset to be divided up between two countries after a breakup as if it were a CD collection. If Scotland walks away from the UK, it walks away from the UK pound.
Britain's three main political parties have spoken out against a currency union, saying it would be damaging to Scotland's economic security. They also claim there's no legal reason for an independent Scotland to keep the pound.
Are they really saying that an independent Scotland could insist that taxpayers in a nation it had just voted to leave had to continue to back the currency of this new foreign country?
It's seen as a direct attack on the Scottish government, who has built its political campaign for independence on currency continuity. In the government's white paper published last November, it says it wants to keep both the pound sterling and the Bank of England, and that it would be in the interest of both countries. Forcing Scotland to use a different currency, it says, would cost firms in the rest of the UK up to £500 million in extra bureaucracy and transaction costs, especially since trade between Scotland and the rest of the UK is worth nearly £110 billion a year. The Chancellor's latest comment could spark yet another war of words between London and Edinburgh. If the currency union is denied by Westminster, the Scottish government has already warned it could refuse to pay its share of the UK's debt, expected to hit £1.6 trillion in 2016.
Next to a deal that could redraw the media business in the United States, American cable company Comcast has reached an agreement to buy rival Time Warner Cable. The deal would combine America's two biggest cable operators into one with more than 30 million subscribers. Comcast is paying a whopping $45.2 billion. That trumps a previous offer from a smaller rival that also wanted to buy Time Warner Cable. It's not a done deal just yet, though. Regulators will have to give the green light, and analysts warn of tough scrutiny ahead, since the combined company would account for nearly 3/4 of the US cable industry. To pave the way for approval, though, Comcast says it'll leave some markets, which would lower its customer base by 3 million. The companies also say that their businesses barely overlap geographically. Also, the two companies are referring to the growing popularity of alternative services to watch television online, like Netflix, and that, they say, is another argument for them to be able to merge. Now, shares in Time Warner Cable have popped on the news, but Comcast is losing value. That brings us to a wider look of the markets. And over in the United States this hour, we're seeing gains across the board, really. It follows strong earnings from firms like Goodyear, the tire maker, and also TV channel CBS. The Dow Jones Industrial Average up almost 0.5%. It was more of a mixed picture in Europe earlier. The FTSE in London slipped, but the CAC and the DAX gained. Italy's main stock market index also fell back on the prospect of political turmoil. This is Prime Minister Enrico Letta said that he would resign. Let's take a look at some individual company news. Shares in BNP Paribas lost ground on Thursday after the French bank reported a drop in quarterly profits. The bottom line was hit as the lender set aside $1.1 billion to cover legal costs. The bank says an internal probe has uncovered evidence that it may have breached US sanctions. Other European banks have paid dearly for violating sanctions on countries like Iran, Cuba and Burma. Shares in Rio Tinto slipped even as the mining company went back into the black last year. Rio says it made almost $3.7 billion during 2013. That follows a full-year loss of $3 billion back in 2012. Rio Tinto says it's proof that a cost-cutting drive that included thousands of layoffs is working. And Burger King has reported higher quarterly profits on stronger global sales. Between October and December, the fast food chain made $67 million. Burger King is seen to be profiting from headline-grabbing menu items like low-fat chips or French fries, as some people call them. Also, a bacon sundae. How about that? I'm not really sure that a bacon sundae would bring me into a fast food joint, but, you know, it could convince some people, I suppose. And with that, I'm going to send it back to you, Luke, for the rest of the news and some sports, I believe.
Yes, I'm glad also that we're now calling it French fries once again and not the old
well,
freedom
I said chips
fries.
or French fries, to be honest.
Thank you, Marcus. You're watching France 24 live from Paris. We are it is time now for sports. Joined in the studio by Dan Levy. Once again this week, the main story we're covering is, of course, the Sochi